Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Well, the markets have opened and they have, of course, opened with a gap down as the Gift Nifty was hinting at. The Nifty below that 19,850 mark. We'll have to see whether or not we manage to hold on above that 19,800 mark as well in today's session. If you look at the Nifty Bank Index, that's also down by about another 200 points. Yesterday, it was, it was among the top sectoral laggards, of course, led by the private banking names like HDFC Bank. If you look at the HDFC Bank chart, well, that is, of course, the top loser on the Nifty. Once again, remember, brokerages have flagged off, merger overhang that could weigh in on the return ratios, and they have slashed target prices on the stock as well. So the stock under severe pressure today as well, down 1.5% or thereabouts. Among the other gainers, other private banking names like ICICI Bank also feature on the losers list. You have the likes of, Reliance Industries extending losses from yesterday. In fact, yesterday it was among the top laggards on the Nifty, and today it continues to see some bit of selling pressure. Bajaj Auto, that was holding out, even that has come under selling pressure today. Some names from the FMCG basket like Nestle, Tata Steel, Coal India, Bajaj Finserv are some of the losers on the index. What's holding out is Dr. Reddy's, that is the top Nifty gainer. M&M, Hindalco, Axis Bank, mind you, was bucking the trend yesterday. Even though the Nifty private banking pack was under pressure yesterday, Axis Bank continued to hold out and was among the gainers on the Nifty, and even today it is holding out. SBI is the other one that's on the gainers list on the Nifty today. So that was all about how the markets have opened up, and of course, last night we had cues coming in from the FOMC as well. Fed has, of course, skipped an interest rate hike this time around, but it has hinted that we could look at another rate hike coming in this year itself. Even though it has maintained its higher for longer narrative this time around, it has reduced the number of rate cuts that we can expect in 2024. So it's a hawkish pause, and even though the Fed has stuck to the script, the language that it has adopted hints at lesser number of rate cuts in the coming year, and that could add to some pressure when it comes to the global markets going forward. But let me introduce our guest for today, Chandan Taparia of Motilal Oswal, joining in this morning. Good morning, Chandan. We've slipped even below that 19,850 mark, and Nifty Bank, of course, under pressure today as well. What is the next level you'll be watching out for on the index in terms of support? Would you say 19,750 is something that we should be looking at over the next couple of sessions?
Good morning, Nandita. Thanks for having me. So in last 2 days, we witnessed some profit booking, and before that, market was witnessing the dominance of bulls and has seen the strong rally of 1,000 points in last 10-12 days, all the way from 19,225 to 20,222. But after the rally of last 13-14 days, the index has negated its higher highs, higher lows. Mechanical indicator have turned lower due to the weakness in the global market. So some sort of retracement or testing of the key moving average will be there in the market. As of now, it has started to form lower highs, lower lows, and we believe till it holds below 19,950, index has potential to go towards 19,700, 19,650 level. Talking about Bank Nifty index, 2 days back it failed to surpass the key hurdle of 46,369. That is a lifetime high for the Bank Nifty index. It just made high near to 46,251, 255 zone and turned lower, and now started to form lower highs, lower lows, and hurdle sits at 45,750. So till it remains below 45,750, Bank Nifty can drip down towards next support of 44,750 to 44,444. So we are closely looking at 44,444 to 44,750 in the Bank Nifty, 19,700 to 19,650 in the Nifty index.
All right, those are the levels to watch out for. But let's talk about an SJVN right now, Chandan. Stock is down 9%. Government is looking to sell somewhere around, nearly 5% stake via an OFS. Of course, the floor price is at a discount to yesterday's close price. But 9% downtick coming in. What's the trading strategy one should adopt when it comes to an SJVN now?
So I think today they have corporate action dividend is there in the counter. That might be one reason. But overall, we believe the trend is intact. This stock has really done well in this entire year, rallied well from 32 all the way to 80, 82 levels. So I think buy on decline could continue. Major trend is positive. Any decline towards 72, 73 can be utilized for buying. We have major support at 68, and this stock can again rally to us 85 to 88 levels.
Right, those are the levels to watch out for on SJVN. But let's talk about a DCB bank. HDFC AMC has got the RBI nod to acquire up to 9.5% stake in the bank, and the stock is up 2.5% or thereabouts. But at the current juncture, it's moving towards its 52-week highs as we speak, some 20 odd rupees away from that level. Would you expect levels of somewhere around 150, 160 going forward in the next couple of trading sessions?
Yeah, so we have positive on most of the banking names, especially the mid-cap, small-cap banks. And DCB has given a consolidation breakout of last 32 trading session. Earlier it was finding hurdle near to 122 and now it started to hold above the same. And support shifts higher to 125. So with support of 125, we can see a rally to us 137 to 142 in DCB bank.
Right, what's your take on Cipla? There's some negative news pertaining to the stock. One of its US units has got 5 observations from US FDA, in its form 483. The unit was inspected between the 11th to 19th of September. Now Cipla, we saw the stock hitting record highs, amid talks of a promoter stake sale. Of course, we have a couple of firms that are in the race to acquire the promoter stake, but off late it has come off a bit. So what should one's strategy on Cipla be now?
Actually, when market is witnessing some profit booking from high selective pharma stocks are holding. So that is the reason we are not much negative on the Cipla and other pharma name. In fact, positive is there in counter like Glenmark and the Lupin. So as of now, 1210 is major support. If it breaks 1210, then only the bias will be changed. Otherwise, till it was 1210, look for some range bound bias in between 1210 to 1265 in the Cipla.
Right, those are the levels to watch out for on Cipla. But what about Sheela Foam? Of course, it is making an acquisition, Kurlon, and it is looking to raise funds via a QIP. The stock it is under pressure today, 2.5% down or thereabouts. But going forward, would you say, the levels of 1500 could be looked at in say the next 3 to 4 months, because it has come off a bit ever since it announced its acquisition of Kurlon.
Yeah, so yes, Sheela Foam is in focus. The price are shifting higher. We have seen formation of positive price patterns. So because of that, some sort of move could be there. It's down, but I think supports are intact at 1110, 1115. It can again move towards 1200 to 1220 levels.
Right. I want to get your thoughts on some of these tire stocks as well. JK Tyre, that stock was up and about yesterday, given the fact that we had a positive brokerage view coming in on the stock, and the stock, of course, marching ahead in trade. But Apollo Tyres, I think this stock is under pressure today as we speak. Among the tire stocks, would you prefer any of these now? JK Tyres, Apollo Tyres, or perhaps a Sept?
Actually, we need to understand that due to the crude prices, selective tire stocks are not performing because crude is their raw materials. But again, JK Tyre has the different stance. So if you ask me to select one, I'll only go with JK Tyre. I'll avoid Apollo Tyre, MRF and Sept. So if you talk about JK Tyre, 263 is support. It can bounce to 282.
All right, that's the view on JK Tyre, in fact, the tyre pack. But what about some of these power names like Tata Power, the likes of Coal India, NTPC? These stocks have been doing extremely well, even in a subdued market. Would you advise investors to ride the wave when it comes to some of these power stocks?
Yeah, so we are positive on the CPSE index. So if you ask me any central public enterprises, right, public sector enterprises, so we have positive view. So even if you talk about power, energy, banks, defense, so positive will be there. And now if I talk about selective name, like Power Grid, trend is positive. 197, 198 is the support. It can head to us 215. Even if you talk about power, we cannot ignore the counter like Coal India, which is forming the positive price pattern. So with support of 278, it can go to 295. So power stocks showing strength, and I believe momentum could continue. And the good part is relative strength is clearly visible. When your index is falling down, these stocks are holding well. Even a power finance company, including PFC, RSC, will be in focus. Some sort of positive bias will be there. PFC, we have seen some bonus activity. And again, stock is in focus with support of around 225, it can hit to us 245. So positive in most of the power companies, power finance, energy, coal, mining, positive on all these stocks.
Right, I want to get your thoughts on a Blue Star now, Chandan. Yesterday, of course, it was up and about, I think somewhere around 15 to 16% or thereabouts, given the fact that it had launched its QIP to raise up to 1,000 crore rupees. Today, it has, of course, come under a little bit of a selling pressure. But is there a trade here, Blue Star?
Yeah, so if you look at the Blue Star, we have seen a strong rally yesterday with significant jump in the volume. And the stock is trading at lifetime high, continuously making high top, high bottom. Earlier it was finding hurdle near to 820, but yesterday it surpassed the same with decisive trading volume. So buying opportunity will be there. Use any small decline as a buying opportunity. 850 is support as of now. Slow and steady stock has potential to go to 950 to 4-digit marks of 1,000 levels.
Hold that thought, Chandan. We'll come back and speak about more stocks. But let me also introduce our next guest for today, Anand Tandon, joining in this morning. Good morning, Anand. Great to have you on the show. Look at what has happened over the last 3 sessions. In fact, after hitting 20,200 last week, we are down to 19,800 or thereabouts. And of course, cues coming from Fed also not that encouraging, even though it has stuck to its script and held on to interest rates. But another one not ruled out later this year. Crude prices have started rising. FIIs have started withdrawing money. So, where do you expect the markets to head from here? Another 2 to 3% correction on cards from here?
It's difficult to try and predict where the market will be over the near term. But if you were to step back and see what direction can possibly take and what are the triggers on either side, right now the upside triggers are only in the form of momentum indicators, which are especially on the basis of government spend. So if you look at all the companies which have been doing well in the recent past in the stock market, they have been largely based on spends by the central government, and they are basically in infrastructure, defense, and so on. To my mind, a lot of that has already been factored into the price. The other sectors are also mildly over, if not significantly overpriced. Let's say a decade ago, or maybe even 7-8 years ago, a two-wheeler sector, for example, would trade at 12-13 PE, and you would think that was par for the course. Since then, the volumes have actually not gone up to the new high in terms of two-wheelers, for example, and yet the valuations are now in the range of 21 times. I'm talking about industry valuations. Some of the individual stocks are even trading higher than that. And in a context where interest rates are now not likely to be falling anytime soon, there is no particular reason to see a valuation expansion. So net, if you look at most of the sectors, you'll find it difficult to find a reason to be bullish on them now, other than the fact that the earnings growth for sectors like banking, etc., will probably continue to remain reasonably robust over the next 6 to 12 months.
Right. I want to speak to you about the banking pack. Of course, there are some margin pressures that have been flagged off, at least with respect to HDFC Bank from some of the brokerages. But even the move, RBI's move to, announce an ICRR, even though it is looking to withdraw it in phases, that could, impact margins for some of the banks, right? So given the fact that, there could be some bit of margin pressure due to ICRR and as the deposits get repriced, earnings wise, you still see more upside for banking pack going forward? And, among the private banks and PSU banking lot, do you think it's time to stick to those PSU names?
So there is no question that we probably have seen the best in terms of the net interest margin in terms of percentage. However, the value will continue to increase. There is also no doubt in my mind that you are looking at a very robust situation where credit growth is happening quite rapidly. And in fact, the challenge now will be for most banks to be able to increase their liability basis. And this is where the problem with the public sector banks come in, given their rather pathetic level of service to the deposit holders and the consistent fall in market share that we have seen as a consequence for most public sector banks. I don't see that trend reversing anytime soon. So you would actually have a situation where, while the credit growth is quite robust, the deposit growth will not be so great, perhaps, for some of the public sector banks, barring perhaps an SBI or even a Bank of Baroda. And so I would not be betting on any of the smaller banks on the basis that they are relatively cheap. Yes, they are relatively cheap, but This is perhaps, you could still perhaps make some money on them over the next 6 to 12 months. But broadly and from a strategic point of view, I would still stay away and stick with the larger private sector banks. So from a tactical perspective, yes, PSU banks, the smaller ones, could be dabbled into. But remember, when the markets are high and you are looking to find a safer bet, going down the quality curve is usually not a good idea.
Right, that's the view then. Stick to some of those large cap private banks. But let's talk about the new age tech firms now, Anand. Given the fact that there is some bit of earnings visibility when it comes to the likes of Zomato, would you say that this space is has seen the worst, and there's only good times ahead for some of these companies like Zomato, Paytm, perhaps even Nykaa in the line?
So each one of them has a different dynamic playing out. I think Zomato is going to find challenges in terms of the kind of margins that they are charging both their consumers as well as their partners in terms of food production. So the restaurants are already chafing at the bit in terms of saying that you are charging too much, and now they've started increasing platform fees. While initially, I think the consumers will be okay to pay that. I think you will find that if they were to raise it beyond a point, there will be a resistance. More importantly, even with the best of assumptions, the valuations of Zomato, to my mind, looks expensive. That doesn't mean that it cannot grow. There is no doubt that the earnings will probably grow in the near future as the penetration increases. But overall, I think you will have to make very, very strong and long strategic assumptions in terms of how fast they can continue to grow before you can justify where the valuations is. Nykaa, shifting on the other side, has is a niche market at the end of the day. It's targeting the higher end of the curve. And therefore, the growth parameters there are likely to find it itself more challenging. Coming to Paytm, I think that is the one that can perhaps surprise on the upside, though. They are basically getting into the payment banking space very aggressively, and as a consequence have managed to raise a lot of their customer base. Now, how they monetize that is what you need to look at. There is no doubt that their earnings will become somewhat positive, not very far in the future. But the important question is that, will they be able to maintain that kind of growth from there on? My own feel is that among the three, the growth prospects for Paytm look probably the best.
All right, growth prospects of Paytm look the best. But let me also ask you about Bajaj Finance. Of course, after the launch or after, Jio Financial made its stock market debut, we haven't really seen a lot of impact on Bajaj Finance. The stock is holding out fairly well. But going forward, any threat to Bajaj Finance going forward, or do you think the prospects are as good as they look to be right now? Anand, is my voice reaching you? I think we've lost the connection with Anand at the current juncture. But Chandan, let me come to you and talk to you about Bajaj Finance. Stock is holding out, even though it's a weakish market over the last 5 sessions or thereabouts. It has managed to hold its head above the water. Positive returns over the last 5 sessions. Going forward, how is the Bajaj Finance looking on the charts?
Yeah, so Bajaj Finance recently gone slow, but good part is slow and steady. It recovered well in last 4 or 5 weeks. Just couple of days back, it made low near to 6,800 and now back to 75.50. So yes, base is shifting higher. Not expecting bigger momentum, but yes, slow and steady up move will be there. So with support of 73.50, we can see up move towards 7,800 in Bajaj Finance.
All right, let me go back to Anand then and talk about, I was asking you, Anand, about Bajaj Finance and what are the prospects there, given the fact that we have, competition in the form of Jio Financial. But going forward, given the kind of, business strength that Bajaj Finance has, do you think concerns of competition are overdone here?
Well, do you expect to see Jio suddenly penetrate and increase their market share against Bajaj Finance? Well, Jio will increase market share because it's starting from a zero base. Will they impact Bajaj Finance's market share immediately? I don't think so. Bajaj has got a very entrenched position in the market, and it's very unlikely that the entrance of a new player will suddenly change it. Over the medium to long term, given the fact that Jio comes from the house of Reliance and therefore is going to be very aggressive, will that impact margins? I would imagine that could be a possibility. With incrementally, if you see, competition has increased from a credible player with a large balance sheet and the ability to take losses if necessary. That can't bode well for anybody who's been in that area.
All right. I think my last question to you, Anand, on the FMCG pack, given the fact that there is no visible, improvement in rural demand, and of course there's the threat of El Nino. In fact, conditions have already started building in. The street is fairly pessimistic about HUL going forward because brokerages have, flagged off certain concerns regarding volume and margin recovery. But on the other hand, you have Dabur, which is looking to scale up its existing product base as well as focus on premiumization. Would you say that, smaller mid-cap players like Dabur are looking attractive given the fact that, they are looking to scale up their existing products as well as, fairly bullish about the future as so to say. But do you think Dabur is one stock that is looking attractive in the FMCG space now?
So definitely a smaller company has an advantage over HUL. HUL is a behemoth which will find it difficult to grow faster than the market in across all categories. So they will have to create certain market niches which they can expand. So they basically drive the market. Everybody else can ride piggyback on them to the extent that Dabur is trying to expand beyond their traditional markets in terms of the product line and so on. They have better growth prospects. Whether they actually translates into reality is something that we'll have to wait and watch. The other companies, for example, like Tata Consumers, are also showing a lot of aggressiveness in terms of getting out of, just being commodity players into more branded and better quality product pipeline. So there will be opportunities for some of these. None of them are cheap. The market is more than fairly pricing not only their growth prospects, but also giving them the benefit of doubt in terms of being able to execute. So for now, if you're looking for cheaper companies, I don't think they exist in the FMCG space. But then that's a space where you can at least expect to see a reasonably steady state growth. Back the management's not necessarily what the product portfolio is.
All right, that's the view then on the FMCG space. With that, Anand, we're running out of time. Thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It was a pleasure really chatting with you. With that, let me go back to Chandan and talk about specific stocks that he perhaps likes for for the next couple of trading sessions. Chandan, anything on the charts that you are finding attractive and one should perhaps look at? Any recommendations?
Yeah, so we have to be very selective in this market. First, I can focus on M&M Finance, Mahindra and Mahindra Finance. This stock has given a consolidation breakout of last 18 days, decisively holding about 300. So with support of 303, it can go to 325. So first, it will be on M&M Finance. Second, one can focus on counter like power and coal. So I can focus on the Coal India. We have seen good price formation. Technically, it's a pole and flag pattern, which is bullish implication. So with support of nearly 276, we can see a move towards 295 to 300 level. Apart from that, one can focus on pharma name, including Glenmark. Support at 862, can go to 910. So M&M Finance, Glenmark, Coal India, these are the couple of stocks which are on radar.
All right, so those are the stock recommendations coming in from Chandan. With that, Chandan, thanks a lot for taking out time and joining in. Appreciate your, sharing your thoughts with us. Look forward to connecting with you sometime soon. Well, with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. But of course, stay tuned to Moneycontrol for all your other news and updates. From me, Nandita, and the entire team that put the show together, thank you. Thanks a lot for watching.